What's going on, everyone? Sebastian here from Crypto News, bringing you the best crypto content on a daily basis. Today, we're going to be talking about crypto taxation. Yes, I know none of us want to talk about this. Taxes can be a pain in the butt sometimes, but they are a necessary part of any investment vehicles. And today, I'm going to help you stay as compliant as possible, making sure you'll safeguard your investments in the best light without ever attracting too much attention to yourself from the IRS. Because in this video, you're going to learn how to file your taxes correctly and all the things you're going to need to consider when you're doing cryptocurrency investments. Now, remember, folks, I am not an investment advisor. I'm also not a tax advisor. So please, always do your own research anytime you're investing in cryptocurrency. This video is strictly for educational purposes only. Now, if this is your first time watching one of my videos, drop me a comment below and share your thoughts about this content. It really means a lot to me when I know that my viewers are connecting and engaging with my content. And if you never want to miss an awesome crypto video just like this one, then be sure to hit the subscribe button and turn on your notification bells. That way you never miss another crypto video like this. There are so many exciting parts to cryptocurrency investments, but this is definitely not one of them. The IRS classifies cryptocurrency as property, and crypto transactions are taxable by law, just like transactions related to any other property. You can end up owing taxes on crypto in several ways. Even trading one currency for another is a taxable event. It can be difficult to piece together your gains and losses at tax time if you don't keep accurate records. And if you fail to pay your crypto taxes, even if it is an honest mistake, you may face costly penalties as the IRS is working hard to enforce the whole crypto tax compliance. So if you're investing in cryptocurrency, it is important to know how crypto taxation works. In this video, we'll explain everything you need to know about taxes on crypto trading and income. So how do crypto taxes work? You are required to pay taxes on cryptocurrency. When you sell, trade, or dispose of cryptocurrency in any way and realize a profit, you must pay taxes. This is exactly what happens when you sell more traditional investments, such as stocks, and you make a profit. For example, if you buy $1,000 of cryptocurrency and later sell it for $1,500, you must report and pay taxes on the $500 in profit. Purchasing cryptocurrency on its own is not a taxable event. Even if the value of cryptocurrency rises, you can buy and hold it tax-free. First, there must be a taxable event, such as selling cryptocurrency, before you'll be required to pay a tax. And just as with any other investment, if you sell your crypto investment at a loss, you may be able to claim a capital loss, which you may be able to use to offset other income taxes. The amount you owe in capital gains taxes is determined by whether you've owned your cryptocurrency for less than a year or more than a year. If you haven't yet reached the 12-month mark, your profits are taxed at short-term capital gains rates, which are the same as your regular income tax rate. However, if you've owned your coins for at least a year, you may be eligible for a long-term capital gains rate that is lower than most income taxes, depending on your taxable income. The IRS has been working to ensure that cryptocurrency investors pay their taxes. Taxpayers must respond to a question on Form 1040 that asks if they've had any type of transaction involving a virtual currency during the year. Crypto exchanges are required to file a 1099-K for clients who have more than 200 transactions and more than 20,000 in trading volume during the year. The IRS has also served summons on cryptocurrency exchanges to locate investors who had at least $20,000 in cryptocurrency transactions between 2016 and 2020. Away from that, cryptocurrency taxes also come with a couple of extra snags. Here are a few things to know. If you use cryptocurrency to buy goods or services, your transaction counts as a sale of that cryptocurrency. This means you'll have to pay capital gains taxes if the value of your coins has increased above what you paid for them. You'll also have to pay any applicable sales taxes. If you earn cryptocurrency by mining it or or if you receive it as a promotion or payment for goods or services, it is taxable as regular income. At your regular income tax rate, you must pay tax on the entire fair market value of the cryptocurrency on the day you received it. And if you keep the same cryptocurrency you mined or earned from these activities and its value rises, and you either spend it or sell it later at a profit, you'll have to pay capital gains taxes on the profits depending on how long you've held it. So, how to file your crypto taxes? It's never too early to get your crypto taxes in order. The standard Form 1040 tax return now includes a question about whether you've used virtual currency during the year. If you've answered yes, here are some things to consider. Maintain a record of all transactions. You must keep detailed records of your cryptocurrency transactions, including how much you paid for it, how long you held it, and how much you sold it for, as well as receipts for each transaction. While your crypto exchange may issue a 1099-B to both the IRS and you, it may fail to record the cost basis or the original amount you paid for your crypto if you transfer coins between offline cold wallets and your account. According to John Feldhammer, a tax partner at BakerBots, software companies have emerged that will scrub the blockchain to detect transfers between your wallets, whether on an exchange or not, and give you reports of all transactions related to the wallets you give it within a given tax year. Tools such as Coinly and CoinTracker connect to exchanges and crypto wallets to track your cryptocurrency transactions and fill out the forms required to file your cryptocurrency taxes. Complete the required tax forms. Once you have a record of your cryptocurrency transactions, you'll need to fill out the following tax forms depending on how you use your cryptocurrency. Form 8949. This form keeps track of every time you buy or sell cryptocurrency as an investment. This should include the total number of coins, the date and price at which you purchased them, the date and price at which you sold them, and your profit or loss for each transaction. Schedule D. This form summarizes all of your capital gains and losses from all investments, including cryptocurrency. Schedule C. If you received coins from mining, you must disclose whether you did so for profit or as a hobby. If you run a cryptocurrency mining operation, you may owe self-employment taxes if your earnings exceed your expenses for the year. Schedule 1. Schedule 1. If you report your crypto mining as a hobby, you would report this income on Schedule 1, Line 8. You won't have to pay self-employment tax, but you'll be limited in what you can deduct as an expense. If you keep records in softwares such as Coinly or CoinTracker, you can connect them to your preferred online tax software. Then, using the online tax software, file your combined state and federal return. Token Tax offers a full suite of accounting services to track and prepare both your crypto and regular taxes for those looking for a one-stop shop. You can also employ a professional. Preparing for cryptocurrency taxes can be difficult, especially because their laws are constantly changing. If you've made a significant amount of money from cryptocurrency, it may be worth hiring a certified public accountant who specializes in this type of tax work so the IRS doesn't come after you later. Now, let's talk about how you can reduce your crypto taxes. If you believe you may have to pay cryptocurrency taxes in the future, here are 5 tips to help you minimize them. Number 1, invest in cryptocurrency for the long term. If you hold a cryptocurrency investment for at least a year before selling it, your gains are eligible for a preferential long-term capital gains rate. Depending on your taxable income for the year, this can nearly half your tax rate, reducing it from a maximum rate of 37% for short-term gains to a maximum rate of only 20% for long-term gains. As with any investment, you can profit from cryptocurrency gains by claiming losses on other investments in the year you realize your profit. That is, if you made $5,000 selling Ethereum but lost $5,000 selling Bitcoin, you would not owe any tax because you broke even. However, these losses are not limited to other types of cryptocurrency. If you are about about to cash out a large cryptocurrency investment, look through the rest of your portfolio to see if there are any other losing investments you could sell to offset your gains. Furthermore, if you lose significantly more than you gain in a year, you can deduct up to $3,000 in excess losses from your income taxes and carry forward any unused losses to offset future investment gains. Since your crypto tax rate depends on certain factors, if you have the luxury of time on your side, you can always try to wait for a lower tax rate. If you return to school, retired, moved to a lower tax state, or got laid off, you may find yourself in a lower tax bracket. Timing your crypto sales with such events allow you to sell your cryptocurrency while owing less in taxes. While mining cryptocurrency may appear to be a low-cost activity, in theory, the cost of computers, servers, electricity, and internet service provider fees are significant. If you are a cryptocurrency miner, you can deduct these costs from your mining income. However, the amount you can deduct will depend on whether you classify your operations as a business or a hobby. You can invest in crypto using a retirement plan. This type of account, like other IRAs, allow you to make deductible contributions and only pay taxes when you withdraw funds. And there you have it, everything you need to know about crypto taxation. At this point, you should know how to file your crypto taxes and possible ways to reduce what you can pay in crypto tax. Well, thank you so much for watching. Again, if you have any comments about this video at all, please drop them below in the comments. If you have any questions, I'll get back to you as soon as I can. And if this video helped you in any way, shape, or form, smash that like button. It really does help support this channel and it means the world to me. Thanks again. I'll see you all on tomorrow's video.